right, guys, there is a lot going on in the stock market right now. There is a very convincing bear case and there's a very convincing bull case. And we need to discuss this because I need everybody on the same page here. You just witnessed the FOMC meeting and a lot has changed. So definitely want to get into that. Let's talk about the bear case. All right, so Nusi, I'm gonna let you kind of kick that off because they need to listen in for this one for real.
Yeah, and the thing is, guys, look, so we're not necessarily mad if you go either direction, right? But right now, the bear case essentially is just look around and see what's happening. We just saw in the last 2 weeks, the market go up, down, based on one thing, which is the banking sector. The entire banking sector was just completely shocked after what happened with Silicon Valley Bank and then the Signature Bank and then First Republic Bank. So we already got into all that. And a lot of that was causing unconcern for investors and even just regular day people. And then, the Fed came in and said, whoa, we're going to pause. We're going to help you guys out. We're going to bail out the big banks. But remember, the key words there are big banks. Those are the ones that are really being rescued. So what about the small banks? What about the retail commercial banks that you see on your street or your block that you're not really too sure about? Are they going to survive? And if they don't survive, how does that impact the market? Because there's still funds in those banks, right? People are still using those banks. And then on top of that, what we just saw recently was with what happened with the Swiss banks. The two largest Swiss banks are UBS and Credit Suisse. What just happened with Credit Suisse is pretty big because they just got bought out by their so-called rival, if you really think about it. And now with UBS coming to save the day, yes, they put the Superman cape on, they saved the day. But at the end, what really matters is since this huge bank was on the verge of basically collapsing, what does that mean for other banks, bro? That's what's concerning. And that's why a lot of people are talking about cutting interest rates right now. That's the only way they could stop this bubble from popping. But if it pops, I don't think even an interest rate is going to help.
Yeah, and I'm not mad at you saying. Plus, the thing is, people don't realize, but like the whole Credit Suisse situation has implications globally because there's a lot of global interest into that one bank. Like
the global bank,
that failing affects us over here. So don't think like, oh, that's going on in that country. Like, nah, yo, that comes right back to us very much. So that's why it was a big deal, and that's why our government and everybody was involved in making sure that situation got handled. All right. And then also, I know you brought up like Yellen pretty much saying that she's only going to be looking to cover the deposits for bigger banks. And like you said, those smaller banks, we don't know what's going to happen with them. And I completely agree, bro. That is something to be concerned with. And that is showing you that the interest rate hikes that just happened, they really did like find their way through the economy negatively. Because at first it seemed like these interest rate hikes were happening and things seemed to be fine, you know what I mean? Unemployment was looking just fine and everybody was, the market was booming and stuff until Silicon Valley Bank kind of was the first domino to drop. And then now you see all these banks are tumbling over because it shows you that that high interest rate environment does hurt the economy. And this might just be the beginning.
And another thing I want to add on to that, right? So guys, like I always say this, and I know, Rel, you and I off camera talk about it, but you guys who have been watching us for a very long time now, you guys have probably heard me say this multiple times. Just look around, talk to people just around you and see how they're feeling. Bro, one of my uncles, his insurance company that he had insurance for just claimed bankruptcy. They're no longer there. So now that insurance company is failing. I'm not gonna name the insurance company because that's none of my business. It's a big insurance company, a top 15 insurance company. That's huge because what happens to the smaller insurance companies? So it's not only banks that are struggling, insurance companies are struggling. And on top of that, if these companies are claiming bankruptcy, as Rel just talked about, the unemployment rate is only going to get worse, right? Like people are going to get fired. So if you guys are keeping up with the news right now, and I'm in the sector so I can even speak to it, essentially people from Credit Suisse are worried. Like bankers and people who are on the buyer side of things, they need jobs, bro. Just because UBS bought them out does not mean there's multiple jobs for them right now. No, they have to find new jobs and some of them might not get new jobs. So once again, if that's with the bigger banks, think what's happening with the smaller banks. That's why it's not a bad idea to be cautious right now and lean on the bearish side of things. That's my biggest concern with this whole thing. But as we said, all that could change with one decision.
Nah, for real. And plus, like, speaking of, like, there's also Blackstone. There's been some turmoil going on with Blackstone on the commercial real estate side. So that's something else that might be cracking is commercial real estate. And we can see how that affects the real estate sector, because if you know, they were big buyers of a lot of commercial properties and properties in general. And they've been having trouble with their finances. So
we're buying a lot in 2020 when things were overpriced.
Exactly. And so there's a lot of things that went on in that pandemic time period that might be, we might have to pay for that in this time period, because everything was running up before and things are going to come crashing down. They come with a price tag. And then also what I want to talk about too is on the bear side is, bro, Jerome Powell, remember, we are recording this before FOMC came out. So depending on what his decision is, right? So let's say he went with 25 basis points. You guys would know by the time you're watching this. If he went with 25, that means he rate hiked again. That's cool. That's actually expected right now that he's going to do that. But if he says that he's going to pause after this, then that means that interest rates are still going to stay high, right? And if he says he's not planning on cutting anytime soon, then that means more things are still going to crack. And the market would probably go down after that. And what's scary about that is we could potentially enter a period of stagflation, because stagflation is when we have a recession pretty much, but inflation still continues to run high. So let's picture people potentially losing jobs. The economy is not doing so well, but at the same time, prices are still going up. So who could really afford that? That's the worst case scenario. And we're actually in potential for that to happen. And so, it's even scary too if he decides to cut interest rates. Let's say Jerome Powell says he's gonna cut interest rates very soon, like the market has been pricing in pre-FOMC. Then, yeah, you know what? Everything gonna run up again. We're gonna be back in the same scenario we were just in, where everything's running, even assets. You're gonna have stocks running up, real estate running up, just regular products running up, and that can't be good either, because inflation doesn't get solved. It's already still high at 6%.
Yep. And literally, the only thing I would add on to that is I think one extra piece, which is salary. Because guys, like as Rels just said, assets are going up. And I know some of you guys might be thinking, yo, assets are going up. That means my returns are going to be fire because I was buying. Yes, your stock market might run up, cool. But keep this in mind. If housing is going up, the price of other assets are going up, and your wages are going down, nothing matters, bro. Like, think about it. Your wages are never going to increase at the same pace as inflation when inflation increases at 10% a year. It's just not possible unless you're in a new job. So if you're not able to buy everything, you're going to start struggling again. And that's why the bear case is there. So that's something to just keep in mind.
The last thing I'll say on the bear case really quick is we did cover this on a video before. A lot of times the bottom of the stock market comes after rate cuts. So even if Powell does do rate cuts, he says he's going to be doing rate cuts soon, and the market rallies now, there could be a potential that the market could come crashing down after he makes that announcement, because that's typically what has happened in history. It doesn't have to happen, but beware of that. Even if you see a reaction first that looks great, it could happen after he cuts rates.
I think it was like 60-something% chance. I don't remember the exact number. We mentioned it in the video, so make sure you check that out. But let's now remember, guys, if you're still watching, one, we're about to discuss the whole bullish case, because there's one decision that could change everything we just talked about, and it could not be relevant. Before we get into that, please make sure you like this video, because it does mean a lot to us. But let's talk about that one decision, bro, that could change everything and just crumble everything we just talked about, throw it out the window. So go ahead.
Yeah, ultimately, if Powell comes out in FOMC, which you guys have already seen, and he says, hey, you know what? I'm going to cut rates. The market probably get a rally crazily. If he comes out and says, hey, you know what? This is the last rate hike, and after this, I'm going to be dropping interest rates, maybe starting in the May meeting. The market will rally you after that too. So it's pretty much anything along the lines of him easing up on these rate hikes and actually starting to decrease the federal fund rate. Then the market should be able to rally you off of that, because at the end of the day, that means that more money is back flowing around, and that's going to send the stock market up. It's just like we said, it's tough because obviously inflation is not solved yet.
And that's my biggest thing. So that point you just made, look, yes, the stock market will go up and quantitative easing will start again. Money will start flowing in. we just got to understand it's going to be bullish for a short period of time in our opinions, because you're just kind of kicking the can down the road. That's all you're doing, because inflation will go up. And then when do we deal with this whole situation, right? So yeah, stock market wise, yeah, we're going to be bullish. Cool. Economy wise, I don't know how it's going to work.
I would say this too. Like it's very rare for us to have 2 consecutive negative years in the stock market as well. Mm-hmm. So being that we had a negative year in 2022 and 2023, it's actually historically accurate for us to have a positive year in the stock market in 2023. So that's another thing that bulls may like to hear, as well as the fact that there's an election year coming up next year. And so one thing that's for sure is anyone involved in that election process wants to make sure that the economy and the stock market are doing well by the time it's time for election. Because one thing people think back on is like, man, when the stock market was down, who was my president? Mm-hmm. And they're not going to want that president back, or anybody in the entire government, to be honest, in all those positions, not just the president. So they're going to be thinking like, man, I don't want to elect this person again because my portfolio was down. So
you don't want to get into the whole political thing, but it's true though. It actually is true. You don't want a Republican, you want a Democrat again. You don't want a Democrat, you want a Republican again.
Yeah, you want whoever's going to make sure your portfolio looks lavish. That's all it is. So they have an incentive to make sure that they're doing things that the stock market would like. As sad as it is, they have that selfish intent, whether it's going to help the economy or not. They want to make sure that the stock market is booming by the time that the election comes around. So I know that's kind of heading more into the 2024 side, but that's something that bulls could also look forward to, I would say.
Nah, that is true. That definitely is true. And honestly, guys, at the end of the day, y'all have to make the best decision for yourself. We're just trying to paint a picture of both sides, just because at the end of the day, once again, it's our decision and our motive to provide you guys with whatever we have researched, but it's your decision to do what you want with that research, right? So that's all we wanted to say. So if you're still watching, we appreciate you. Thank you. Please make sure you like, comment, and subscribe to the channel. Plus hit that little notification bell, because we drop
2 videos a week.
You don't want to miss them. Thank you. Make sure you check us out on Monday. Until then, peace.
Peace.